Welcome back, everybody. This time around, we are going to be working on a Schedule C. We are going to double click on our return, access Slayer. The Schedule C, you could always go into the income menu, start it from there, line 6, or use the form finder. This is my best friend right here. Double click it. It will take you right in there. Anybody who's our prior client, last year client, um, if they had a Schedule C already, I need you to click on Pull. Once clicking on this, it's going to show how many Schedule Cs they had. You double click on the options and it will pull forward. Then you go into that particular Schedule C to enter the income and expenses. For this example today, we're going to create a brand new one. So we're going to create one. It gives you the option to put the business code or enter a description of the type of business. Here's a list. You're able to do some search. For now, we're going to leave it empty. The principal business or profession, let's say they are a driver. Let's say taxi driver. And they don't have a business name. They're not registered yet. They just happen to do Uber. If they had a business name, they were registered, they had an LLC, you'll put the EIN, the business code, the address, all the information pertaining to the formation. This is just general information. Normally, you don't have to go on here unless it's something different, specific, like they did not materially participate or they're clergy, anything else. Their accounting method is different, things like that. But normally, you just click to continue. If you need to make any changes, this is how you go back to change the basic information. Let's say you created a Schedule C and then you found the EIN. You go back and you enter. They're actually an entity to New Jersey. You found their formation documents and their XYC LLC. The income menu, the expenses, the business use of home. It's just an overview of the main menu. The income menu, anything that is cash or 1099Ks, go on line 1, miscellaneous or NEC forms, go on line 2, statutory employees that have a W-2 and the statutory employee is marked. The income reported on the W-2 goes on this line and attached to a Schedule C. Cost of goods sold, these are for people who have inventory. You're able to put the inventory at the beginning of the year. This is inventory that's been carried forward from the year before. Purchases this year minus anything withdrawn for personal use. Cost of labor, if they paid anybody. Materials and supplies, other costs. End of year inventory. This is when they do inventory at the end of the year, how much they have a hand from when they started to the purchases after their sale is the end of the year inventory. You have to have a beginning, you have to have an end. Other income and a total is going to show up on here. So normally people who are cash business, they'll may provide you a profit and loss statement where they tell you they made $50,000 in cash transactions. They receive an NEC from um, from a partner, from some type of freelancing. The NEC is very simple form. You get the EIN from the form. You fill out who is the payer. Let's say that um, New York City freelancer, pay them. You put the address. And again, you use the zip code. Box 1 is how much they made. Let's say they made $5,000. If any federal tax was withheld, you put it on here. If any state was withheld, you put it on this section. If there was more than one, you create another one. Say it was a miscellaneous. Miscellaneous, as you know, is usually the royalties, rents, and anything else other than freelancing. Say they don't have anything. Or let's say they do music and they received $1,000 from ABC Records, and they're located in New York City. So you have your NEC, your miscellaneous form. So this is all your income. So they gave you cash, they gave you NEC, miscellaneous, and if they have inventory, let's say they were a client from last year and their end of year inventory is going to carry forward to the beginning of inventory, they had $5,000 worth of inventory from last year. This year, they show you receipts that they bought $3,000 worth of merchandise, and in material they spend material supplies. Usually I put it on the other side, so let's leave that alone. So the end of year, let's say they ended up with $4,000 at hand worth of inventory. So they had $5,000 worth of inventory. They purchased 3, so they have $8,000 worth of products. They ended up with $4,000 still at hand at the end of the 2023. So that means they sold 4,000 plus profits. So plus 4,000 plus the profits, let's say it came out to the $50,000 in cash. It's just an example. So the total income under Schedule C is $52,000. We're going to go into the expenses. Let's say they did advertisement. They did advertisement in Facebook. They advertise in Instagram. They paid some type of agency. If there's multiples and they don't have a P&L, you have to F10 and create a list of who they paid. Let's say they paid $3,000 in advertisement. Let's say that they drove their vehicle to go purchase that inventory. They went and did some returns at stores, met up with clients, anything related to the business. And this is the first year that they have a vehicle. We're going to create a new vehicle. if this is a prior Schedule C, we're gonna click on prior, and this is gonna pull forward if any vehicles were used on a Schedule C on 2022 TaxSlayer. This one, by clicking prior, it tells us that there was no vehicles. So let's say they bought a brand new car. They bought a car in the beginning of the year. Total miles driven for the year were 15,000 miles. Commuting miles were 200, and personal miles didn't have any. So it's gonna calculate it at the standard rate, and it's gonna give you a $9,825 deduction based on 15,000 miles. Commissions and fee, depreciation schedule. If we're depreciating a vehicle, again, if we did that last year, we're not gonna do miles. We're just gonna pull it forward, and we're gonna pull from last year. But this year, this one shows that there was no depreciation. You have to keep it uniform. Everything that you do in 2023, you have to go back to 2022 to check what was done. If they did miles, you have to do miles. If they depreciated a vehicle, you have to depreciate the vehicle and do actual expenses for the car. If they pay rent, let's say they have some place that they pay to keep their inventory. They pay $10,000 during the year to keep that inventory. Supplies, they bought a bunch of supplies like packaging tape, boxes, stuff like that, and they provide you with receipts or an Excel sheet explaining the supplies. F10 lets you create a list. So let's say the supplies were boxes. They spend $500 in boxes. Let's say they bought paper. They spend another $500 in paper. Taxes and licenses, they paid $175 to the state of New Jersey for forming their businesses. Utilities, let's say they paid PSCNG and everybody else. Again, you do F10. You can do PSEG. For the year, they paid 709 for let's say they have internet with Comcast. Let's not do that. They just pay electricity. They just pay electrical there. They travel. Again, under travel, we normally list tolls. They pay 524. They went on a business trip for training, give a conference, whatever it may be. Let's do lodge. And the receipts that they gave you were 325. They rented a car for $203. All of that goes under travel. Insurance, let's say they have business insurance, so insurance other than health insurance, business insurance, they paid $1,000 for the year. Legal services, they had their lawyer draw a contract for $700. Office expenses. Office expenses is where you're going to list most of your stuff, like software, um, software, let's say small electronics. They bought, I don't know, a couple of headphones for the office or to use at home or to be able to be on the go for $150. Let's say they purchase a new laptop. I'm gonna depreciate the laptop. They put it into service. The date of the receipt shows in February 1st of 2023. It cost them $2,100. It's completely for use, for business use. And the depreciation method, we're going to find it here. Most common is office machinery or computers. So it's going to be makers 5 years. Are we going to give them a bonus depreciation? No. Would you like to generate the election not to claim the bonus? Yes. All right. So we're depreciating it 100% for 5 years. This is the cost basis. There's no accumulated depreciation because we just started. For federal, depreciation is going to be 420 and state is going to be 420. If for some reason you have to do a mid-quarter, because of the date that they purchased it, you go on here and change that. Whether it's listed property, you go on here and change that. So from the laptop that cost $2,100, they're taking 420 this year, and it's going to show up here. Contract labor, let's say they hired a couple of people for an event one day and they paid $100 for, someone who they hired that day. They sell that payment out of their business bank account, and you have receipts for that. So out of their 52,000, he already showed us receipts for 28,000. Let's say out of that he makes most of his negotiations, his phone calls, his paperwork, he draws contracts out of his home. You're able to do the house or the apartment, and this is always going to be a percentage. So in order to do the use of home, you need the total square footage of the house and the square footage used for the business itself. So if they have a spare bedroom that they're using as an office, let's say that the house is 1,500 square feet, and out of that, 120 square feet is being used as an office. It's going to calculate 8% of any of their expenses. If they own a home, you can deduct mortgages because the mortgage itself is not under the business name and is an actual house and not a business. We cannot do direct expenses. So for direct expenses, it's always going to be zero. And we're going to do indirect expenses. So the mortgage statement from the 1098 shows that they paid for the year $12,000 in interest. The real estate taxes, again, they're not direct expenses, so it's going to be zero for that. And the indirect expenses, the property taxes are $8,000. And the homeowner's insurance or hazard insurance, whatever it is never going to be direct expense because, again, it's not under the business name. So since it's an indirect expense, we're going to say that's $800. Utilities, it's not direct, it's always indirect. And this one is, let's say, you can create a list for their PSE&G bill for the year was $5,000. Their Comcast bill for internet was $1,200, so on and so forth. So everything that you put on this line, it's gonna be 8% of that. It's gonna be giving us a credit. The only one that may be a direct expense is the repairs. If the office in that home, he repaired it. He put a brand new door, painted the walls, made repairs that is only to the office. Those are direct expenses again. So let's say he spent $501. Indirect expenses will be he fix the electrical panel in the house. Fixing the electrical panel will be $1,500. So 8% of the 1,500, it's gonna be indirect expenses because this pertains to the home. The 501 that was the direct expense is gonna be given in full credit. So this is asking you out of what we said that they paid in interest of $12,000. They're allowed $960 to be deducted out of the Schedule C as an expense. Do you want to carry the remainder onto Schedule A? So they want you to enter the amount to be carried on Schedule A. You want to do this because some clients end up itemizing instead of taking the standard deduction. So this is going to help you. This is the same situation for the real estate taxes. You don't double count this. Real estate taxes on a personal property. If you're doing Schedule C, this section right here carries forward to what's going to be in Schedule A if they decide to itemize. So for the business use of home, out of all the information that we put on there, they're allowed to take a $2,781 deduction. So far, based on their expenses and their income, their Schedule C is done. And now the AGI went up and the refund is adjusted. Anytime we make changes to the 1040 or the federal side, we have to update the states just by going into them and pulling the information forward. And out of the refund of $2,000 that was there for New York, The Schedule C income is reflected here. And the refund is adjusted. Anytime you see this is asking you, do you want to carry forward any taxes paid to a non-resident state? You're going to click on yes, so they could get credit. And it's showing you from Delaware, they're allowed the $233. So this is doing the math for you. So now you have an updated return refund amount. Here's your Schedule C. If you need to create another one, same deal. And now you have the two Schedule Cs. So they made $53,000. Their expenses are $31,141. So again, all of that gets adjusted. You want to view your results just to see where you're at and how your tax return looks. You can always generate a PDF. It's going to ask you whether you want to print it. You want to click on yes, even though you're still not printing it yet. It's just going to generate a PDF. The 8879, the first page of the 1040. Their W-2 income, their interest, additional income from Schedule 1. These are your Schedule Cs. They're taking the head of household standard deduction because it's higher than Schedule A. Their taxes paid through their W-2. No taxes were withheld from the 1099. They still qualify for earned income credit, the refundable child tax credit, and they still get a refund. They get a refund for $17.35. Self-employment gets calculated automatically. And then a copy of all your schedules. You can print it, save it, or just get out of it. You have to get out of your tax return and you have to answer your due diligence. Do you satisfy the knowledge requirement? Yes, we satisfied it. Did any of the information appear to be incorrect? No. Do you satisfy the record retention? Yes. Did you ask the taxpayer in case of an audit about their status? The ones that say must answer, you have to get in. Did you ask questions for the Schedule C? And then they're all answered. And that's certified. Now you can exit. Okay, there we go. Now you can exit the return. Are you marking this from transmission? No. Always answer no. And now you're done with your Schedule C. You go into Atom, you put your notes, you make your adjustments, you contact the client, send it for review. And that's all.